So this week we're going to be covering the final pieces of the master budget. We already went over all these pieces that go into the income statement, and we went over the cash budget. So now we're just going to touch on the last two components, which would be the capital budget and the balance sheet, and then we're going to put it all together. So I'm mainly going to touch on the balance sheet and the capital budget in this video, but we are putting everything together in it. So if you do need to go back and reference any of the earlier videos, please do so. So you'll be given this beginning information as usual, and then you'll also be given this beginning balance sheet. So these are all of our balance sheet accounts at the beginning of the period. And here we have all of our assets: cash, accounts receivable, inventory, buildings. And down here we have all of our liabilities and our stockholders' equity. So accounts payable and what we call note or loan payable. The accounting textbooks tend to call this notes payable. It's for any loans you have, any line of credit that you have. That will any type of borrowing will fall into this line. And then we have common stock and retained earnings. So you'll construct the sales budget as per normal, and you'll construct your schedule of expected cash collections. You'll also construct a material purchases budget, and I do want to go over this again with you just in case you need a refresher. I think I had posted one video from Inspira on the material purchases budget, but I'm going to touch on it again here. So you need your budgeted cost of goods sold, and if you scroll back up here, remember that your cost of goods sold is based on the number of units that you sold. So you sold 1,600 units, and if you go down here, there's a cost of goods sold of $68.75 per unit. So we're just going to multiply those two items together to get our cost of goods sold. And again, you can use formulas for this if you prefer. I'm just going to use the calculator to illustrate it. So 1,600 units times our cost, not our sales price, but our cost of $68.75. It's going to give us $110,000. So that's what I'm going to put down below for my cost of goods sold. Okay, and I need my ending merchandise inventory and my beginning merchandise inventory. Well, the beginning inventory is easy. All your beginning balance sheet amounts are here. So your beginning accounts receivable that you'll need for your cash collections, your beginning cash that you'll need for the cash statement, beginning accounts payable that you'll need for your purchases disbursements, and also I've got my beginning inventory here. So my beginning inventory is $30,000. So I'm going to put that down there. And then I need my ending merchandise inventory. So if I scroll up, I can see that I'm given that here. Since we're just doing 1 month, they went ahead and gave us what our ending merchandise inventory needs to be. So that's going to be $40,000. So this is my amount that I'm going to need to purchase for inventory. And a reminder that what we're looking at here, when we're looking at a material purchases budget, so we're looking at a company that's buying finished goods inventory from another company. So this is a company that's a retail company that isn't manufacturing the goods that they're selling themselves. They're buying it from someone else. So these would be the finished goods. They need to purchase $120,000 of inventory for that month.